Have you ever found yourself staring at a losing trade, convinced that the market is wrong and you're right? That sinking feeling when you watch your carefully planned position move against you as you mutter to yourself, "This doesn't make sense. The market has to turn around." If so, you're not alone, and today's video might just change your entire approach to trading forever. Welcome back to Market Masters, where we explore the timeless wisdom of trading legends that can transform your results. Today, we're diving deep into the revolutionary mindset of Jesse Livermore, one of the greatest traders who ever lived. His insights remain as powerful today as they were a century ago. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Now, has this ever happened to you? You enter what seems like the perfect trade, supported by solid analysis, only to watch the market move in the opposite direction. You hold on, convinced your analysis is sound, only to watch your small loss snowball into something much more devastating. What if I told you this common experience reveals the fundamental truth that separates amateur traders from professionals? The market, as Livermore discovered through painful experience, is never wrong. It's we who are wrong when we try to impose our will upon it. The price action, what Livermore called the tape, speaks louder than any opinion, hope, or fear we might harbor. Stay with me until the end, because this single realization transformed Livermore from a struggling speculator into one of the greatest traders in history. What you're about to discover might surprise you. Trading success doesn't come from being smarter than the market. It doesn't come from better analysis, more sophisticated systems, or even from access to better information. The true secret lies much closer to home. It comes from mastering your own impulses. Think about your most painful trading losses. If you're honest with yourself, weren't most of them the result not of bad analysis, but of poor emotional control? Of holding losers too long, cutting winners short, averaging down on bad positions, or abandoning your own rules in the heat of the moment? The difference between the amateur and the expert isn't found in intelligence, it's found in self-discipline. The person who tries to outwit the market, who lets their ego convince them they know better than the collective wisdom of all participants, always pays the price in the end. But what if there was a way to develop that iron discipline that Livermore mastered? What if you could train yourself to leave pride at the door and approach the market with the open mind of a true professional? Imagine the difference it would make in your trading results if you could follow the market's lead rather than fighting against it. If you're serious about improving your trading results, hit that subscribe button now. I share these timeless market principles that can transform your approach to trading every single month. This transformation begins with one of Livermore's most profound realizations. That pride is the most expensive thing you can bring to the market. Think about that for a moment. Not poor analysis, not bad timing, pride. When we enter the trading arena with our ego leading the way, we're setting ourselves up for a painful journey. We become attached to our opinions, we take price movements personally, and we start seeing the market as an adversary to be conquered rather than a flow to be followed. I've witnessed this mindset trap countless traders, from beginners to those with decades of experience. The need to be right often overshadows the need to be profitable. The hidden truth behind successful trading isn't about proving your brilliance to the world. It's about having the humility to follow what the market is actually telling you. The expert trader approaches each day with a blank slate, with no preconceived notions about what should happen. They simply observe the tape's action and align themselves with it, making decisions based on what is, not what they wish would be. This mental shift represents one of the most powerful revelations in any trader's development. When you finally release the need to validate your analysis and instead embrace the market's reality, trading becomes less emotional and more mechanical. You're no longer fighting the current, you're swimming with it. But here's where Livermore's wisdom gets even more counterintuitive. Once you've mastered leaving your ego at the door, you face an even greater challenge: doing absolutely nothing. That's right. The hardest work in trading isn't executing complex strategies or developing sophisticated systems. It's having the discipline to stand aside when conditions aren't favorable. The amateur's mindset craves constant action. There's an almost irresistible urge to always be in the market, to feel the pulse of each tick, to be working by actively trading. Yet professionals understand that patience is the ultimate edge. The ability to wait quietly for the perfect setup, even as opportunities that seem decent pass by, is what separates the consistent winner from the perpetual struggler. This patient approach runs completely contrary to our natural impulses. In our daily lives, we're rewarded for being proactive, for taking initiative, for making things happen. But in the market, this same behavior often leads directly to losses. The internal battle between doing something, anything, and waiting for genuine opportunity represents perhaps the most difficult aspect of the trader's journey. I've found in my own trading that the best decisions often feel like non-decisions, those moments when I simply choose to observe rather than participate. This practice of strategic inaction requires a remarkable level of restraint, especially in a world that celebrates constant activity. Now, I want to go even deeper into this topic by exploring how this patient approach connects to where the real money in trading is made. Because contrary to what most believe, the biggest profits don't come from clever entries or perfectly timed exits. If what I've shared resonates with your own trading experience, write in the comments, "Patience is my edge." I'd love to know how many of you have discovered this truth in your own journey. One of Livermore's most profound revelations is that the big money in markets isn't made in buying or selling, it's made in waiting. This concept stands in stark contrast to the modern trading culture that celebrates hyperactivity and constant engagement. The true fortune builder isn't the daily scalper executing dozens of trades, but the disciplined investor who patiently rides significant trends. Think about your own trading journey. How many times have you sold a position too early, banking a modest profit, only to watch in frustration as the asset continued climbing without you? That fleeting moment of satisfaction from taking a quick gain is often followed by the much longer pain of missed opportunity. This psychological pattern represents one of the most common barriers to wealth creation in the markets. The revelation here is that our natural instincts actively work against us. We're wired to seek immediate rewards and avoid uncertainty. This evolutionary programming might serve us well in many areas of life, but in trading, it becomes our greatest obstacle. The fear of losing a small profit drives us to exit positions prematurely, cutting short the very moves that could transform our financial situation. Livermore discovered through painful experience that allowing winners to run requires a fundamentally different mindset, one that embraces uncertainty and prioritizes potential over security. The trader who masters this mental transformation gains access to the truly substantial moves that create generational wealth. But achieving this patient approach requires another critical insight. Never argue with the tape. Markets don't rise or fall based on what you think should happen. They move purely based on the mechanical forces of supply and demand, regardless of how compelling your analysis or thesis might be. This fundamental truth strips away the illusion of control that many traders cling to. You can have the most brilliant analysis, identify perfect technical setups, or uncover overlooked fundamentals. But if the price action contradicts your expectations, you're still wrong. This humbling reality forces us to confront a crucial decision point. Would you rather be right in theory or right in your account? The impact of this choice extends far beyond individual trades. It shapes your entire relationship with the market. Those who insist on being theoretically right often find themselves financially depleted, clinging to elegant but unprofitable ideas. Those who prioritize being right in their accounts, even when it means abandoning cherished theories, discover that pragmatism paves the path to profitability. Ready to elevate your trading journey? Join our community of disciplined traders by clicking subscribe below. We're dedicated to uncovering the psychological insights that separate market winners from losers. Behind the scenes of every successful trading career lies this fundamental surrender. The moment when a trader finally stops fighting the market's verdict and starts moving in harmony with it. This doesn't mean abandoning analysis or thoughtful positioning. It simply means recognizing that the market's judgment is final, regardless of how strongly you disagree with it. The transformative power of this acceptance cannot be overstated. When you truly internalize that arguing with the tape is both futile and expensive, trading becomes less emotional and more mechanical. You free yourself from the exhausting cycle of hope, frustration, and disappointment that consumes so many market participants. As we explore deeper dimensions of Livermore's wisdom, it's worth considering how these principles interconnect with perhaps his most practical trading advice, developing clarity of mind and vision. If you've ever found yourself fighting the tape instead of following it, type surrender in the comments. Sometimes acknowledging this tendency is the first step toward overcoming it. At its essence, expert trading isn't about complexity. It's about achieving remarkable clarity. Livermore discovered that true mastery emerges when you strip away the noise, distractions, and self-deception that cloud most traders' judgment. This clarity operates on two levels: clarity of mind and clarity of vision. Clarity of mind means approaching the market without baggage. No desperate need to recover yesterday's losses, no pressure to impress others, no attachment to being right. It's a state of emotional neutrality that allows you to see what's actually happening rather than what you hope or fear might happen. This mental stillness represents a profound breakthrough for traders accustomed to the emotional roller coaster of hope, fear, and regret. Clarity of vision means developing the ability to recognize authentic opportunities amidst the market's constant movement. The best setups often appear almost obvious in retrospect, so clear that you wonder why everyone couldn't see them. This isn't because these traders possess supernatural foresight. It's because they've trained themselves to wait patiently until the fog clears and the opportunity reveals itself unmistakably. This approach stands in stark contrast to the common habit of forcing trades or chasing action. Most market participants feel compelled to be constantly engaged, as if activity itself generates profits. But Livermore recognized this compulsion as the amateur's downfall. The expert waits for the perfect alignment. When the setup is clear, the risk is defined, and the potential reward justifies the risk. When these rare moments arrive, they act with decisive confidence. The path to this clarity, however, requires navigating perhaps the most challenging terrain of all, your own psychological landscape. This brings us to another crucial dimension of Livermore's wisdom: knowing your trading weaknesses. Behind every blown account and trading failure lies not market trickery, but unaddressed personal vulnerabilities. The expert trader engages in honest self-examination, identifying precisely where emotions interfere with rational decision-making. Do you hold losers too long hoping for recovery? Do you cut winners prematurely out of fear? Do you overtrade when bored or revenge trade after losses? These patterns aren't random. They're manifestations of specific psychological blind spots. What makes this self-knowledge so vital is that the market seems almost supernaturally designed to exploit these weaknesses. It's as if the market knows exactly where your vulnerabilities lie and precisely how to trigger your self-destructive behaviors. This isn't mystical, but mathematical. Your biases create predictable patterns that position you on the wrong side of probability. The transformative insight here is that longevity in trading depends less on market knowledge and more on self-knowledge. Traders who survive decades in the markets aren't necessarily technical geniuses. They're individuals who've mapped their emotional terrain so thoroughly that they've learned to navigate around their own traps. They've developed systems and rules specifically designed to protect them from themselves. This journey of self-discovery represents the inner work that most trading education neglects entirely. While everyone focuses on entry, techniques and indicator settings, the master trader quietly addresses the true determinant of success, the person behind the screen. As we explore how this self-awareness connects to concrete trading practices, we must examine perhaps Livermore's most practical rule for survival in the markets. If you've begun identifying your own psychological trading vulnerabilities, write self-awareness in the comments. Recognizing these patterns is the first step toward mastering them. This journey of self-knowledge naturally leads us to what may be Livermore's most practical rule for survival. Cut losses quickly and never average down on losing positions. This principle sounds deceptively simple, yet it represents the breaking point for countless traders. The revelation here isn't just about mechanics, it's about prioritizing survival above all else. Think of your trading capital as an army in wartime. Every soldier lost weakens your position for the next battle. Every trade that bleeds your account diminishes your ability to capitalize on future opportunities. Capital preservation isn't just a prudent strategy. It's the fundamental law that makes all other trading rules possible. Without capital, you simply can't participate in the game anymore. What makes this principle so challenging is that it runs directly counter to human nature. We're psychologically wired to avoid admitting mistakes. We construct elaborate narratives to justify holding losing positions, convinced that the market will eventually validate our intelligence. This reluctance to accept small losses often transforms manageable setbacks into account-destroying disasters. The watershed moment in many trading careers comes when they finally internalize that being right about any single position is utterly meaningless compared to survival. The expert trader accepts small losses as simply a cost of doing business, the toll paid to stay on the road. They understand that no individual trade defines them and that their edge emerges across a series of decisions, not in any single outcome. This mental transformation represents perhaps the most difficult mindset shift for traders to achieve. It requires overcoming the ego's desperate need for validation and embracing a more mechanical approach to the market. The question becomes not, how can I prove I'm right, but how can I protect my ability to trade tomorrow? Once this survival mindset takes hold, it naturally connects to Livermore's strategic approach to position building, pyramiding. Rather than risking everything on a single entry, the expert trader builds positions gradually as the market confirms their thesis. This approach fundamentally alters the risk equation in your favor. Think about the illuminating contrast between the amateur and professional approach here. The amateur piles in all at once, taking maximum risk before the market has validated anything. The expert starts small, only adding to the position as it moves in their favor. Each addition comes with the security of paper profits already in hand, essentially letting the market fund the position's growth. The psychological impact of this approach is profound. By starting small, you remove much of the emotional burden that typically clouds judgment. You can think more clearly because less is at stake initially. As the position grows, you do so from a position of strength rather than hope. This creates a virtuous cycle where rational decision-making reinforces itself. Pyramiding also solves one of trading's greatest dilemmas: how to maximize returns on winning positions without risking too much on any single idea. It allows for substantial exposure to major moves while maintaining the discipline of limited initial risk. In essence, it represents the perfect balance between aggression and caution. As we continue exploring Livermore's wisdom, we find that these principles connect to another critical insight about what truly destroys trading: accounts. An insight that might fundamentally change how you view your own trading activity. If you've ever struggled with cutting losses quickly, write "protect capital" in the comments. Sometimes simply articulating this commitment helps strengthen your resolve. This strategic approach to position building naturally leads us to confront what Livermore called the disease of overtrading, a destructive habit that silently drains more trading accounts than perhaps any other mistake. This revelation strikes at the heart of a fundamental misconception that plagues both beginners and experienced traders alike: the belief that more activity inherently leads to more profit. The awakening happens when you finally recognize that constant trading isn't productivity. It's often just expensive motion. Behind every click, every entry, every exit lies a cost: commissions, spreads, slippage, and perhaps most significantly, the mental fatigue that inevitably leads to poor decision-making. These seemingly small expenses accumulate like an invisible tax on your account, creating a headwind against which even excellent analysis struggles to overcome. What makes overtrading particularly insidious is how easily it disguises itself as dedication or hard work. There's a peculiar satisfaction in feeling busy, in watching multiple positions, in constantly engaging with the market's movements. This activity creates an illusion of progress that can be deeply compelling. Yet when examined objectively through year-end results, excessive trading often reveals itself as the primary obstacle to profitability. The enlightenment comes in understanding that trading is perhaps the only profession where doing less frequently produces better results than doing more. The trader who makes 3 carefully selected trades in a month often outperforms the one who makes 30. This counterintuitive truth represents a profound paradigm shift for those conditioned to equate effort with reward in other areas of life. This insight connects directly to Livermore's understanding of how the market actually transfers wealth. Contrary to popular belief, the market isn't a place where the lucky take from the unlucky, or even where the informed take from the uninformed. It's where the disciplined take from the undisciplined, not through any form of trickery or manipulation, but through simple self-control. The financial markets represent perhaps the purest meritocracy of discipline ever created. The weak trader, regardless of intelligence, education, or resources, inevitably gives up their capital because they lack emotional regulation. They chase excitement. They need validation. They trade from fear, hope, and boredom rather than from strategy and rules. The strong trader collects not because they possess magical foresight or privileged information, but because they've mastered themselves. They've learned to wait patiently. They've developed the fortitude to follow their own rules consistently. Even when emotions scream for deviation, this self-mastery creates a sustainable edge that compounds over time as emotional traders repeatedly make the same self-destructive mistakes. This revelation fundamentally transforms how you view market participation. It shifts your focus from external factors, the next hot stock, the latest indicator, the breaking news, to internal development. The journey becomes less about predicting the market's next move and more about conditioning your responses to whatever the market delivers. As we continue exploring Livermore's wisdom, we encounter another critical insight that challenges conventional thinking about what trading actually is. This perspective shift might completely alter how you approach market analysis. If you've noticed yourself overtrading or realized that excessive activity has been holding back your results, write "quality over quantity" in the comments. Sometimes naming the pattern is the first step toward breaking it. This understanding of discipline naturally leads us to one of Livermore's most liberating insights. Trading isn't about predicting the future. It's about reading the present with clarity and following the line of least resistance. This revelation completely reframes the trader's task and removes an enormous psychological burden that most market participants unnecessarily carry. Think about the conventional approach most traders adopt. They consume endless research, analyze countless variables, and form elaborate theories about what will happen next week, next month, or next year. They position themselves based on these predictions, essentially betting on their ability to see what others cannot. This forecasting mindset creates tremendous pressure and almost inevitably leads to disappointment. The breakthrough comes when you realize that the present moment contains all the information you actually need. The price action, volume patterns, and market structure, visible right now, tell you where the momentum is flowing. If it's flowing upward, you align yourself with that flow. If downward, you do the same. If the direction is unclear, you stand aside. This simplicity represents the essence of Livermore's approach. What makes this insight particularly powerful is how it illuminates a counterintuitive truth. The traders who try hardest to predict future moves often lose the most money. Their attachment to specific outcomes blinds them to what's actually happening. They fight against reality instead of flowing with it. Meanwhile, the trader who simply reads and follows current conditions navigates the markets with far less stress and far greater accuracy. This perspective shift feels like removing a heavy backpack after hiking uphill for miles. You no longer bear the impossible burden of knowing what cannot be known. You free yourself from the exhausting mental gymnastics of prediction and instead develop the much more valuable skill of present moment awareness. The markets suddenly become less mysterious and more readable. The journey toward this kind of clarity, however, inevitably brings you face to face with what Livermore identified as the trader's greatest adversary. Not the market, not other participants, but yourself. This revelation represents perhaps the most profound awakening on the path to trading mastery. The real battlefield isn't found on the charts, it's within your own mind. Fear fights against your discipline, urging you to cut winners too soon. Greed whispers that you should hold losers too long. Impatience pushes you to trade when nothing worthwhile presents itself. Hope convinces you to average down on bad positions. These internal conflicts determine your results far more than any external factor. This insight fundamentally transforms how you approach improvement. Instead of endlessly searching for better indicators or entry techniques, you recognize that your psychological weaknesses represent the true limiting factor. The path forward becomes less about acquiring new trading knowledge and more about developing greater self-awareness and emotional regulation. The traders who achieve consistent long-term success aren't necessarily the most intelligent or technically skilled. They're the ones who've learned to recognize and manage their own psychological tendencies. They've built systems specifically designed to protect themselves from their known vulnerabilities. They've accepted that the greatest edge comes not from outsmarting the market, but from outsmarting their own destructive impulses. As we explore even deeper dimensions of Livermore's wisdom, we encounter his insights on what truly devastates trading accounts and prevents long-term survival in the markets. If you've recognized that your own psychological patterns have been your biggest obstacle to trading success, write "internal battle" in the comments. Acknowledging this truth is often the first step toward meaningful transformation. This recognition of our internal battle leads directly to one of Livermore's most sobering observations about what truly devastates trading accounts. Nothing empties a trading account faster than the constant need to be in the market. This insight cuts straight to the heart of a destructive pattern that often remains invisible until significant damage has already occurred. Think about the hidden costs that accumulate with every trade. Beyond the obvious commission, fees, there's slippage on entries and exits, the bid-ask spread, and opportunity cost. These expenses might seem trivial on any single transaction, but they create a substantial headwind when multiplied across dozens or hundreds of trades. It's like a slow leak in your financial boat, barely noticeable at first, but eventually capable of sinking the entire vessel. The revelation comes when you finally calculate these costs across a month or year of active trading. Many discover with shock that they need to generate substantial returns just to break even after trading expenses. This mathematical reality creates an almost impossible hurdle for the overactive trader to overcome, regardless of their analytical skills or market knowledge. What makes overtrading particularly dangerous is how it operates below conscious awareness. Few traders deliberately set out to overtrade. Instead, it manifests as restlessness, as the creeping fear of missing opportunities, as the subtle addiction to market action. By the time the damage becomes apparent in your equity curve, the habit is often deeply ingrained and difficult to break. The transformation begins when you recognize that restraint isn't weakness, but strength. The discipline to stand aside when conditions aren't favorable isn't laziness, it's strategic preservation of your most valuable resource, your capital. This mental shift represents a crucial milestone in trading maturity, one that many never reach, despite years in the worst markets. This understanding naturally connects to what may be Livermore's most liberating insight. Cutting losses quickly gives you freedom. This seemingly simple principle contains profound psychological wisdom that extends far beyond mere risk management. Taking small losses promptly isn't just about preserving capital, it's about preserving opportunity and mental clarity. Consider the contrast between two traders facing the same market. The first refuses to accept small losses, holding underwater positions in the desperate hope of eventual recovery. The second cuts losses quickly and moves on, while the first remains chained to past mistakes, watching in anguish as their equity slowly drains. The second maintains the freedom to pursue new opportunities, unburdened by emotional baggage. This freedom operates on multiple levels. There's the obvious financial freedom of capital not tied up in losing positions. But perhaps more importantly, there's the psychological freedom from the mental drain of watching losses mount. The ability to admit mistakes quickly and move forward with a clean slate represents perhaps the most underappreciated edge in trading psychology. The journey toward this liberation often requires confronting painful truths about our relationship with being right. Many traders unconsciously value being proven correct more than being profitable. This prioritization creates an emotional attachment to positions that should be viewed merely as business transactions. Breaking this attachment opens the door to a more mechanical, less emotionally turbulent approach to the markets. As we deepen our exploration of these principles, we begin to see how they interconnect with an even more fundamental aspect of trading psychology: the relationship between patience and profitability. If you've experienced the freedom that comes from cutting losses quickly instead of holding on to hope, write "clean slate" in the comments. This simple practice truly transforms how you experience the markets. As we've explored these timeless principles from Jesse Livermore, I hope you've recognized parts of your own trading journey reflected in these insights. The path to trading mastery isn't found in complex strategies or obscure indicators, but in developing the kind of psychological discipline that Livermore himself had to learn through painful experience. These principles may seem deceptively simple, but their application requires a lifetime of practice. The market will continuously test your resolve, your patience, and your ability to follow your own rules. But in that challenge lies the opportunity for genuine transformation, not just as a trader, but in how you approach uncertainty and decision-making in all areas of life. If you found value in these insights today, consider becoming part of our community by subscribing. We're dedicated to uncovering these timeless trading principles that remain as relevant today as they were a century ago. And if this resonated with your own trading experience, leave a like. It helps others discover content that cuts through the noise and focuses on what truly matters in the markets. I'm curious, which of these principles hit closest to home for you? If you made it all the way through and found yourself nodding along, type "timeless wisdom" in the comments. Your perspective adds tremendous value to this ongoing conversation. I've prepared a video right here that dives deeper into position sizing strategies that perfectly complement Livermore's principles. Click and join me there as we continue building this foundation of trading knowledge that stands the test of time.